All right, welcome back. We have got to talk about last week because, wow, it was a complete game changer. The entire story the market was telling itself just flipped on a dime, and we're going to break down exactly what happened and, more importantly, what it all means for the week ahead.
And really, this quote just nails it. After days and days of selling and just general nervousness, one single event completely changed the mood. From deep caution to what our source material calls moderate optimism. And that pivot, that's the theme for our entire explainer today.
So, here's how we're going to break it all down for you. First, we'll look at the big catalyst, the Fed's green light. Then, we'll follow the chain reaction, how that led to the dollar's dive, which in turn sent stocks soaring. Then, we've got to talk about the massive AI wildcard that could change everything this week. And finally, we'll wrap it all up with a clear game plan. Let's do it.
All right, first up, the catalyst. You know, everything that happened in the market last week, every big move, it all traces back to this one thing, a subtle but really important shift in tone from the Federal Reserve. This was the first domino.
I mean, the change was just night and day. Look at this before and after. The market went from 4 straight days of risk off, everyone running for the exits, selling everything, to a complete 180. The Fed's comments sparked this huge relief rally and an immediate switch back to a risk-on mindset.
So, what in the world happened? Well, the market heard what it's calling a dovish pivot. Now, in plain English, that's just the moment the Fed signals it's pretty much done slamming the brakes on the economy with rate hikes and might, just might, be getting ready to tap the accelerator with rate cuts. For Wall Street, that's about the biggest green light you can get.
And look, this wasn't just some vague feeling. It had an immediate, real-world impact. The market that actually bets on what the Fed will do next immediately started pricing in a much higher chance of a rate cut. And we're not talking about way off in the future. We're talking as soon as the very next meeting in September. That's a huge shift.
So with that pivot in mind, what was the first domino to actually fall? Well, the US dollar. You see, if the market thinks rate cuts are coming, holding dollars suddenly becomes a whole lot less attractive. And the result was an instant and pretty sharp reaction in the currency markets.
And you can see the effect pretty clearly here. The US dollar index, that's the DXY, which pits the dollar against other major currencies, it had been trying to rally. It was looking strong. But after the Fed's signal, it just completely ran out of gas and ended the week on a down note. All that early strength just poof, gone. So these are the numbers traders are glued to right now for the dollar. That 98.60 to 98.80 area acted like a brick wall. It just couldn't break through. So now all eyes are on the downside, looking at those support zones around 97.80 and especially that critical level at 97.50.
And that leads to the million-dollar question, right? In the markets, money doesn't just disappear, it just moves somewhere else. So if everyone's selling the dollar, where did all that cash end up going?
And the answer is stocks. See, a weaker dollar is like rocket fuel for big American companies that sell their stuff all over the world because their foreign profits are suddenly worth more dollars. So as that money flowed out of the dollar, it poured right into the stock market, lighting a fire under the S&P 500.
And let's be clear, this wasn't just a handful of the usual big tech names pulling everything up. No, the source material points out this was a broad relief rally. We saw strength absolutely everywhere, from smaller companies to sectors like housing that are super sensitive to interest rates. That tells you the optimism was real and it was widespread.
And the rally was so powerful, it has now put the all-time high of 6,481 right in its crosshairs. That's the huge ceiling to watch. And on the flip side, that weekly low of 6,344, that's become the new line in the sand, the critical support that has to hold.
You can almost see the confidence flooding back into the market when you look at the VIX, which is basically the market's fear gauge. When it's high, people are scared. Midweek, it was up around 16.6. By the end of the week, it had cratered down to 14.2. That's a huge drop, and it signals the traders are breathing a whole lot easier.
So, everything's looking rosy, right? Well, not so fast. This new optimism, it's about to face a couple of massive stress tests this week. And there's one event in particular that could either pour gasoline on this fire or stop this rally dead in its tracks. Circle this date on your calendar, August 27th. Because after the market closes that day, we get the one report that absolutely everyone is waiting for.
This is the big one. It's NVIDIA's earnings report, and the source material calls this the key determinant for the AI narrative. This isn't just about one company anymore. This is a referendum on the entire AI boom. A good report could send the whole market flying higher, But a bad one? That could trigger a super fast sell-off across the board. The stakes are huge.
And if that wasn't enough, we also get the PCE inflation report. Now, this one's really important because it happens to be the Fed's favorite way to measure inflation. So if this number comes in hot, it could throw a ton of cold water on that whole dovish pivot story. But if it's cool, it basically gives the Fed the all clear.
Okay, so let's tie this all together into a game plan for the week ahead. Because with these two monster events coming up, the market is really at a fork in the road. Our source material lays out two very clear paths for how this could all play out.
You've basically got two roads the market could go down this week. Path number one is the base case. The good times keep rolling. A great report from NVIDIA and a cool inflation number could easily push the S&P 500 to a new all-time high. But path number two is the bear case. A miss from NVIDIA or a hot inflation number shatters all this optimism, breaks that key support level, and could start a much bigger slide down. So here's the bottom line. All this newfound optimism, this rally we just saw, it was built on a feeling, a change in sentiment. But feelings are fragile. And this week, that optimism is about to get put to the test, a hard test, by real actual data. It's the story versus the numbers.
And that leaves us with one final thought to chew on. The market flipped from fear to optimism incredibly fast. But there's a very thin line between optimism and greed. So the real question for this week is, when does that optimism cross the line and become the single biggest risk to the entire rally? That's the tightrope we're all walking now. Thanks for watching.